Same thing, let me repeat once more. So in this method of intraday trading, we'll be calculating the volatility using the past 10 days last traded price, and from that volatility we'll be calculating what is the price range for the day, so which is being taken into reference from the last trading day's price. So 9th December was the last trading day's price. So using that last trading day's price, we have, so this is the 8th January was the last trading date. So based on this 8th January last trading dates, trading price, so we have estimated that Bank Nifty is expected to move 110 points based on the volatility of 0.988 daily volatility and 18.89 or 19 point approximately the yearly volatility. So this method says that if your volatility is less than 20%, you use the Fibonacci principle. If it is greater than 20% and above less than 40%, we will be using any one of the Gann principle, maybe Gann angle, maybe Gann price to price squaring action, maybe price range and time. So any one method we will be using for that. And then if it is greater than 40% of volatility, then you will be using the Elliott wave structure. So that doesn't mean that you can't able to use Gann in the less than 20, you can't able to use Elliott in the medium volatility condition. So I have given you a scale here, particularly less than 20 I am classifying it is a low volatile market, greater than 20 less than 40 I am saying it is a medium volatile market, above 40 I am saying that it is a high volatile market. So based on their success ratio, whichever method Elliott has produced during my process of experience and experiment, so Elliott has produced more than 70% accuracy on the high volatility condition, and it has trailed a bit in the medium volatility condition. For that reason only I am recommending Elliott wave for high volatility conditions. So do not think that Elliott wave we cannot apply in the lower medium. You can apply, but accuracy matters. After all, we are doing the trade only for making the profit. So this is what the things. So after getting these levels, we will be using any of the Fibonacci ratio or Elliott or Gann principle. Based on that, we will be making some judgment. So on this particular subject, plenty of videos we have given in the site. So at the end, I will just show you the link from where you can access those free literatures. Fine. So now, based on this analysis of volatility, it says that for Nifty, for today for Nifty, we can buy at 6212, keeping a stop loss of 6183. If you are buying at 6212, we have maximum probability to touch 6235. If we are selling at 63, we have chances to touch at 6160. And in fact, the yearly volatility for Nifty is 11.51, which is extremely low. So though it is less than 20, theoretically we are speaking, it is theoretically speaking it is less than 20. You can use Fibonacci, but such a extreme case low volatility scenario, it is better to avoid this counter for trading, because if you enter the trade also, the winning has very less points, and same time the oscillations also may not be proper to reward you in the intraday trade. So for that reason only it is better if it is, so you can say roughly if it is less than 15%, you can avoid trading in that counter. So that may not reward you much, that may give you both the sides triggering. So Bank Nifty, we can think of trading, still it is in the low volatility scenario, 18.89, it is 19%. So this is also still in the low volatile scenario. So same concept, using the same concept, we have also developed one software. So let us start with the equity. So I will be just going on taking one or two experiments, and so one or two experiments I will be going on taking. So equity, I am just going for Axis Bank. It has a good volatility, and I think it can also give us something good in the intraday. So I'm just equity, I'm going for Axis Bank. So Axis Bank equity, I have just loaded the data and I have just hit on the calculate button. So this is what it is giving for Axis Bank. So let me save this for our future reference. Axis Bank, I am getting this information, buying Axis Bank at 1200, keeping a stop loss at 1194. If I am buying at 1200, I'll have the targets. So like I have the targets till 1215, and if I am selling the Axis Bank at 1194, then I will have the probability to touch near about 1178, and here the probability of falling down is 66%, probability of going up is 33%. We can think of, if it is given a breakout, then we can think of selling this Axis Bank also. So let us see what the Axis Bank is giving us now. So what the Axis Bank is giving us now, so let us see for that. So I'll be taking a fresh worksheet for you so that all this. So let me delete all these things. Whatever the experiments we are doing, only those stocks I can put it here. Axis Bank equity we have taken. So 1295, 96 seller, 95 is the buyer. So this is the thing we are getting in this. So Axis Bank we are getting, this is the value. So 95 and 96, 96 in fact it is trading. So we can say 96 level. So 99 we can think of buying, or to 1200, 99.68. So 1200 above we can think of buying, or 94 level we can think of selling. So let us break that level. Any one breakout it has to come. So 94 level has come. We can think of selling now. Our stop loss is 1200. We have got a chance to sell Axis Bank equity. Now same way, let me take another stock. It will be better if I can say Tata Steel Limited. So 393 it is currently. So let me take for Tata Steel. Tata Steel, Tata Motor. Yes, Tata Steel has come. So you can also change the stock list. So 394.61 it is asking us to buy, or 395 you can round it. 392.28, so round it to 392. So 394 it is telling us to buy, and 394 point something it is saying. So 395 it is telling us to buy. So this also I'm going to save it. So these are the levels for Tata Steel for the day. These two experiments I will take, and probability of falling down is more, going up is less. So let me save this experiment. So let me save this experiment for the future use. So 395 and 392 with the stop loss. So this is what for the Tata Steel. So Tata Steel we have taken for the Axis Bank. Day trade in the options in Bank Nifty, 11,034 above, it is saying that it is an uptrend. So you may be thinking that yes, 2 minutes before you have calculated some levels was coming, 2 minutes after you are calculating one more level is also coming. So which level I should stick to? So whenever you have calculated, that time the last traded price was different, that time the volatility parameter was different. So that level is valid for you for 1 hour. So within 1 hour, if you are not getting any entry, or your stop loss is not triggering, or you are not getting any targets after the entry, then you can think of coming out of that. So it is 11,034. So let me go for the 11,000 call option and 11,000 put option. So 11,000 call option, the reference price is being taken 278. Analyze the option. So it is saying that intraday trade is recommended this in this volatility, this implied volatility is this one. So it is telling us 292 above. You can think of buying the 11,000 call option, giving a stop loss of 262 for targets 351. So I am just also taking the print screen of this one. So I will be saving this experiment. So I'll be saving this experiment. So that we can follow it off afterwards. So same way, let me go for the put option. 11,000 put option 279. So analyze the option. So here it says that the trade is not recommended because the implied volatility is too high as compared to the volatility, which may result in the decay in the time value. So you may not get rewarded in this. So better to avoid these things. So this is for the intraday options. 11,000 call option it has recommended us. However, 11,000 put option it has not recommended us. That doesn't mean that 11,000 call option only you will buy that. So that I did not say you that 11,000 call option only for buying you can make it. You can think of selling at 262 also for keeping a stop loss of 292, for aiming at a target of 199. So if either side break out, once the Bank Nifty breaks below 10,981, you can think of selling this call option also, because trade is recommended. Here implied volatility is very much within your reach. So you can think in that aspect also. So it is not that you should only buy that. So let us take some stock option also. So I have taken, so let us take some stock option. Take it for Axis. Take it for Axis Bank. Axis, it is a good volatile stock. So let me load those strikes and other things. So Axis is being loaded. So analyze the future 1200, 1194. So Axis future we have not taken. So Axis future stock Axis. So it is 1198 now, near 1200 level. So near 1200 level Axis is now 9895 below your downtrend starts. So here let me investigate on 1200 call option and put option. 1200 call option and put option. Call option it is not recommending. The reason is the volatility of Axis is 18.12 and implied volatility is pretty high, 37%. So buying of this option is not at all recommended. So let me go for the put option. So this too also is not recommended. So 44% implied volatility with 18% of 44% of IV currently intact, with 18% of volatility in the underlying asset. I have told you earlier also, many of you are the old participants. The IV and the volatility should maintain a 30% band, so that you can buy that option. So what is the next thing I can do? If this is IV is too high as compared to this thing, then what is the next thing I can do so that it can give me some benefits? So for that reason only I'll be going for a very simple trick here. So we have got option. Let me put this thing, and by this process also you can learn one of the beautiful option strategy. Axis Bank 1200 call option and 1200 put option. This is the values it is trading. So Axis is in the downtrend from 1195 and it is going to be uptrend above 1200. So we are at 119899 level. So if I can think in this term purely for intraday, if I can think in this term, if axis cross 1200, I will do the following. What I will do? One, I will buy future, sell 1200 call and 1200 put. So this is a conversion for intraday. Conversion for intraday. I can do this. If axis fall to 1195, then my strategy will be to sell future, sell 1200 call and sell 1200 put. Preferably I will be getting in that around 44, 45 and that level. So where do I keep my stop loss and coming out of this strategy? Since intraday trade is not recommended in this strike because of very high implied volatility. So if I'll be booking the profit in this above case, I'll be book profit at 1212 if I am doing this one, and same way in below case I'll be booking the profit at 1183 level. So book profit at 1183 level. Where I can book losses and come out, exit from this strategy. We are taking for intraday because IV is too high. Exit this strategy slightly below, because you cannot 95, you cannot keep it as a very nearest level. Slightly one or two targets below you can put. Around, so you can say now 90 level, target 3 level you can think. If you have entered the above trade, exit at 1190 level. And similarly for this trade, if you have got a chance, then you think of closing the trade. Around 1207. So exit at 1207 level. So this is the point you should book. Why we are forming the conversion strategy? One of the beautiful strategy for intraday you can take because of this high implied volatility condition. So because of this high implied volatility condition, you can take it. Conversion strategy, because this implied volatility is too high, it is definitely going to die down, or it is going to shrink by 1 or 2% in this trading session. So it is a too high difference is maintaining. So you can utilize this conversion strategy for intraday in such kind of scenario instead of buying into those options, because buying into those options will always have a wrong effect. It will always have a wrong effect because of your decay in the process of your implied volatility. So this is also one of the strategies you have learned which you can utilize for intraday. Now axis has given 1201. You can think of initiating this strategy also. So buying futures, selling 1200 call option and 1200 put option together. So you can think of this one, buying the future, selling a call option, selling a put option together for intraday. And if the axis falls below 1190, then you can think of exiting this trade. So as per our estimation, so this trade we have got a chance. Buying futures, selling a call option and selling a put option, conversion for intraday trade, because axis has crossed 1200 level. So let us see where it is taking us. Axis, in fact, 1190 level, it has come in the equity segment which you have sold, and couple of targets you can get it from here. And Bank Nifty also we are just following off. So now let us move to one pair trade. So I have just chosen Bank Nifty, Axis and ICICI Bank. Let me load the data now, because the time I have loaded and now this thing has changed. So Rather, let me close this application and let me open it again. Let me open it again, and I'll be just going for index future, Bank Nifty, Axis Bank, and I'll be going for ICICI Bank. Load data. I have to load the data. Then I have to do the analysis here. For intraday, let me see, because intraday based on the beta decoupling, anything is coming. So in both these two pairs, it is not coming. Only this pair of Axis and ICICI Bank, it is saying that buying Axis, selling ICICI Bank, recommended with the option hedging. So recommended with the option hedging. So Axis is already there. So let me go for a future stock, ICICI Bank. So this is at 1053. So it is telling that buying Axis and selling ICICI with some future hedging. So since we are selling this one, it will be better if I can option stock and ICICI Bank some deep in the money, because I am going to do it for intraday trade. So time value decay factors will be there, but still I can think of little in the money I can go, because for intraday only I am going for. So 1020 call or 1040 call also I can think of. 1040 call. So 40 rupees, 13 rupees and other things. And I can think of Axis. Axis is somewhat in the money put option. 1250 put option. It is for intraday trade. I'll again say that we are going for intraday trade. For that reason only I have just made it like this. So you can think of in this order. This pair trade, buying Axis at 1201 and selling ICICI with 1053 or 54, 52 something it is coming, 1052, selling ICICI with 1052. It's recommended this future trade, but in fact with that you can put some options for intraday. So like buy 1250 put option of Axis at some 75 it is saying, and buy 1040 call option of ICICI at 40 rupees. So let us see for intraday trade, intraday how much it is going to give us. So you can think in these terms. With one dip in the money option, you can think of initiating the trade. Nothing wrong in that. So that you will have a, so here 25 rupees as the time value you are paying for, and here some around 20 rupees of time value. So 10,000 rupees time value is there. However, it is not going to trigger in the intraday basis. That 5,000, 10,000 is not going to trade in for the intraday basis. So you can think of initiating this trade. If you are going for a positional trade in the same pair, let me see. So it is saying that only except beta decoupling, all are saying that buying ICICI and selling Axis is recommended. So if you are going for a positional trade with the same pair of Axis and Bank Nifty, this concept of intraday trade will not work, because 3/4 of analysis, Jensen's alpha, Sharpe ratio, Turner ratio says that buy ICICI Bank, sell Axis. So this pair which you have taken, this is for intraday only. So here Mr. Shah is asking that who is independent and who is dependent. In fact, this the stock which is having the higher volatility. Volatility of ICICI is 33, Axis is 28. So definitely ICICI will be independent. So beta decoupling has told you this kind of thing. However, If you wish to take it for the positional, then this trade will not favor you. So you need to exit from this trade only in intraday basis. You cannot keep this trade for positional basis. Same way, beta decoupling never recommends for this one. However, ICICI Bank buying and selling of Bank Nifty is recommended by other three ratios. And Bank Nifty and Axis, if you are going for, so then this two also is divided. Bank Nifty is given a buy signal for all three. However, Axis is being given sell signal in all these things, but all these things is being recommended with a hedging in the options. So if I can go for a slight changes, so I have just taken the stock future. I have taken some HDFC Bank. HDFC Bank. So let me analyze in this pair. So here I am getting a divided view. For that reason only I am not going for. So ICICI Axis is still divided. ICICI Bank and HDFC Bank, it has a view, but with the option hedging, this two also is divided. Axis and HDFC also is divided. So if I can remove this Axis and put this Kotak Mahindra Bank. So I need one very concrete pair which can give me good in the, so all are coming with a option hedging. So I may not be getting any pair for without option hedging. So here Kotak and HDFC is giving me this thing, and ICICI and so go for a technology stock. So Infosys and TCS, but Infosys result is tomorrow, so that is may not be good pair now, but still we can go for that. Tech Mahindra, so let me analyze for this one. So no intraday things is there, but however, so Infi and TCS, buying Infi, selling TCS, it is recommended, but still it won't be good to do the trades now in this particular pair, because Infosys result is tomorrow. Maybe it is going to react based on the results. So maybe it is based on the react on the result part. So you may avoid this pair. So you may go for some other pairs. So I am going for some like IDBI. I am going for IDFC, and I am also going for Syndicate Bank. You can form any kind of pair here. So these three pairs I have taken. So intraday basis, most of the things are not having, only one thing is IDFC and IDBI it is recommending. Positional, let me check it. So positional analysis, IDFC and Syndicate I am getting a clear view. IDBI and Syndicate also I am getting a clear view. IDFC and IDBI I am getting a clear view. But here I am getting a fantastic view here, Syndicate and IDFC without option hedging. So IDFC and Syndicate. So let me, I was hunting for that one only. I was hunting for a pair, so which can give me without any option hedging. So this is the pair, I got it. I got IDFC and Syndicate. IDFC and Syndicate. IDFC and Syndicate Bank. Syndicate Bank, both I have got it. So this is telling me buying IDFC and selling Syndicate Bank without any option hedging. So I'll be just Saving this experiment, so for our future reference, maximum holding period for all pair trades used to be 10 days, maximum 10 days. So the price which we have clocked here is 96.9 and 101.9. 96.9. So we have got 96.9, 96.9 and 101.90. So this is the thing we have got it. So this is the thing we have got it, and in fact we can so 96.9 and 101.9. So without any option hedge we are getting it. So let us save it and we will just follow it afterwards. So this has know about our products and services. So these are our associates at Gujarat, at Mumbai, and at Chennai. This is our head office. So you can contact us in this phone numbers. And as all of you know, we are a academic and software development company. So we do not have anything with the brokings. So we have 8 to 9 different varieties of products. So it says that 8 varieties of product. It is having some of the courses with some of the software. So intraday software which I have demonstrated today, it is on the volatility software. Pair trade which I have demonstrated, it comes with these futures and options. So these softwares are real-time softwares, and these courses has different price tags. So 8 different variety of courses. Separately it is priced as 26,000. At a package it is coming as a 12,000. And the softwares is having an annual maintenance of 3,500 per year. So if you have multiple softwares you have installed in one system, but you will be getting only one annual maintenance. It is not multiple annual maintenance. We have also come with one new product on option strategy which I am going to demonstrate now. So this option strategy software comes with a price of 10,500. It is not included in the full package. So it is having an annual maintenance of 3,500. Here what you will be getting, you will get the software, you will get a 3 hours course on how to use this software and other things, and one book on futures and options written by me which has many tricks of the future options, and 15 days exclusive supports by email on different strategy formations and all. Now we have come with an offer here. So those who are going for a option strategy software, maybe they want that yes, something to be given to them in terms of option strategy calls and other things. So here I will be simulating specific calls using the same software with the approach of delta neutral, vega neutral, theta neutral, all these things. So this will be given to you as a allied services for 3 months. So with the software, but the pricings will be 25,000 for that. So this is an offer, limited people only we can take in this. So next part is our seminar programs. So we have an upcoming batch, online batch, which is being scheduled on March 2014, and the dates and other things you can find it here. 10th, 11th, 12th and 13th you have 4:30 to 5:15 theoretical session. 18, 19, 20 you have the practice session on this. And this program is having 34 intraday trading techniques and 22 option trading techniques, which is already written in the book. Same concept will be being covered here. You will be given 8 hours of basic courses on this and a couple of techniques, because with this short time frame we may not able to discuss all the techniques. So some of the techniques we will prepare some audio visual presentations and give it to you. So this comes with all our materials except option strategy software. Except option strategy software, it comes with a 16,000. 4,500 without material, those who have already participated any of our paid event, for them 4,000. This too also has come with an offer, 25,000 with all materials with option strategy software plus 3 months exclusive option calls from Mindesk. So this also an offer we are running. So for this, so details on this thing you can call to our Chennai office. For any query on these products, you can call to our Chennai office. And Mumbai and Gujarat, the goods are readily available. You can enroll if you are in that particular city. You can enroll with them and collect the goods from there. So this is what the products and services about our thing. So Mr. Atul Lakhani, I'll tell you uh, uh, which script is good for the result in what, whether in pair trade or in intraday trade or which one. So pair trade means definitely you should see the some frontline stocks. So I'll just go for some of the option strategy. Then I'll just take your uh, pair trade. Definitely you go for the frontline stocks. So if you are enrolled with our, if your email ID is there with us, then you may be getting those strategies in your email box. Every month I used to send couple of strategies to you to encourage you that yes, you should trade on strategies which has a lot more features to protect your money. So here in one strategy I have given. So let me, January 3rd, I think it is being given. So Bank Nifty future selling at 11,500 call option and this one. So this is strategy being given to you on the 3rd January. Before that also December 30th also I have given one strategy for January. Buy this one at 1300 level, sell 1350 call option and 1200 put option at 3 lots are 18.5. So you can say 1300 level to 1200 level, 100 rupees you are losing here. However, that 1350 which you have sold at 29. So let me see at what price it is quoting. So 1350 call option which is being quoting at 8 rupees, 29 means 20 rupees you are gaining from here, and 18 rupees whatever the put option you have bought, it is at 47 minus 18 into 3, so 87 plus 20, so 107 and 100 rupees you are losing on this front. So 7 rupees is profit and 7 translated into 7 into 250, so 1750. So this is almost 10 days is over, 30th is given. So this strategy 1750 profit it is giving, profit of 1750, and I have just given a net delta positive. It could have given a good gain if there was a consolidation could have happened, but there is a stiff correction, that's why we have got it. So I have just said that the expected range will be 1175 to 1394 and strategy can yield so near about some 4500. In fact, with this stiff correction also you are getting a profit of 1750. And one more strategy also I have given here on 3rd January, Bank Nifty 11,200, so 200 points you are losing here, call option 11,500 call option, so 200 point you are losing here, and this call option is some 30 points you are gaining here, so this is a loss 200, and 10,800 put option, 10,800 put option, So let me see for that also. So option index, Bank Nifty. So 10,800 put option also 191 it is quoting. So you have bought the day it is being given. So you bought it at 158. So 158 minus 191. So 33 points into 3. So 33 into 3, 99 point gain here. And here some around 30 point gain. And 200 point almost you are losing here. So 129, 130 points you have received. So it is at a small loss. So let us wait for a good fall. Then only we can able to at the 10,800 level or so we can get. So another 1 or 2 days you can just wait. If it doesn't break out, then you can come out from this strategy. Also, we have given one strategy yesterday on the Infosys result. I have given you 2 recommendations here. Selling Infosys at 3,500. Call option and put option. This is because the very high IV is there, and buying the 3,200 put option and 3,700 call option. However, this will take a higher margin, near about some 70,000 margin it can block for you. So tomorrow definitely the IV is going to fall. Mr. Vikas Sharma, which one is you is to exit in loss? So which one you wish to exit in loss? Which strategy? If you tell me, then I can tell you. So also you can think of buying a deep in the money call option and put option, and selling some deep out of money call option and put option for NP, because expected that this IV is going to fall, and that is also going to. Both are having the same meaning. However, this one will be more appropriate if you can take it, and it is having a higher this thing. So this strategy is how we are forming. So just to demonstrate one small thing here. So suppose I am going to initiate the same thing here. So I am going for a strategy on that same Infosys. I am going for a strategy on same Infosys. So what are the parameters I need? Whenever you are forming any strategy, you need the Greeks. So I'll be just, this is our option strategy simulator software. It gives lot more information whatever you require. It gives you advanced price trend, it gives you a Greek scanner, it gives you net Greek analysis. These 3 things is highly essential for a option strategy trader. So this is 3478. I am just going for a call option 3,500. I am selling 1 lot. I am going for a put option, say 3,400, and I am just selling it, or 3,450. I am selling 1 lot, anticipating tomorrow post result it is going to give me a good gain. So same time by these things, suppose 2 days I am leaving, so I am just going to calculate in this order. So this is what it is giving me the profit graph. However, this is being taken with the reference to the current IV, and it's the decay proportionate way for tomorrow. And if I go for a net Greek analysis, it says me I am at a 0.0994. Still, since I am selling these 2 options, I may not be at a very safer side. I may not be at a very safer side. So I can say that 116 plus 114. So I am getting around 230 points. Nothing wrong if I can just buy a call option of 3,700. So just I am buying. So some amount of money I can sacrifice. However, I can, or if I can buy one put option of say 3250, 200 points I am giving, because 230 points I am receiving. I am receiving 230 points. For that reason only I am buying this 230 points I am receiving. For that reason only, with a equal depth, 200 point depth, I am buying a call option and put option. By this process, if I am just going to do it and calculate, so this is my net profit and net loss, it is featuring me. So however, this thing is being taken with a reference to the current IV, which is quite high. It says that if the IV maintains in this order and it is flowing in this order with a small technical things, but this is not going for a technical correction in the IV, rather it is going to post result, it is going to be a sharp correction. But in this case, if there is a technical reason intact also, you are not going to make any huge losses in this strategy. So by this process, what are the net Greek has come? Net Greek has come to negative 0.03 delta, and also net gamma also is here, net vega also it is 1.492 1.492 1.492 minus 1.492 minus 1. So this is the level you are means intact, and vega is a parameter you can say which told you about the volatility decay. But one very good thing you can find it here. So most of these strikes is having a IV around 40. Most of the strike. So which is not sustainable post result, which is going to be die down post result. So for that reason only, I recommend that for Infosys, this is the best strategy. You can just take it for one day. Selling this 3,500, 3,400 call and put option, and buying these options for yesterday's price. Today also if you want, you can just do some changes and make something. So block for a day and see what is the result it gives.